The economy is hot and all boats are rising, but that doesn't mean there aren't going to be winners and losers. Retailers are still under tremendous stress.
See JCPenney, for example.
Yeah, so what makes a winner, what makes a loser? There are two types of winners, in my opinion. One is value-based players, low-cost structure, can offer the best price. Walmart is the epitome of value. They have the wherewithal and the positioning to make that transition, to pivot towards the internet, to make the huge capital investments require the investment in margin, by the way. The margin's still under pressure in order to do it, so they can be a winner. Other winners are those, besides value players, differentiation-based players, those that are essentially verticalized and offer something you can only get there, or services that enter the home, which is different from a verticalization. If you get product, you can only get there. That's backward verticalization. Forward is into the home, which Best Buy has done a brilliant job of. So they have a differentiated offering, and they're working with their vendor partners very well to have products and services you can only get there. So they're doing a great job. Now, losers are those who offer commodity products that are available everywhere. And in that situation, the internet crushes your margins, your gross margin and your operating margin. That defines today's department store.
I would also say maybe Walmart falls into some of that category as well in terms of offering products that are offered or sold in many places and their margins get crushed by the internet. You know, Jerry, if we had this conversation yesterday, we would have taken Walmart's stock chart, compared it to the XRT and said Walmart was a loser. And then all of a sudden today, with the 9% gain in today's session, Walmart is a winner because it puts the stock price basically flat for the year. So is Walmart, do you know enough right now to say Walmart is a winner?
Over the long term, absolutely, yes. And again, yes, they offer products that are available elsewhere, but they're the low-cost producer. So they're in that first category of companies. Like Costco's another one. Now, they have their Kirkland brand that's very good, but basically, you go to Costco, so the value is tremendous, right? So those companies can win it. They have the cost structure and ability to do that. Walmart's a large company. I've said many, many times right here on CNBC, there'll be two big winners on the internet, Amazon and Walmart, and everybody else better be playing with one of them if they want to be around 20 years from now.
JCPenney, as I mentioned, that stock down 25% today. Sales were down. They didn't meet their numbers at all in terms of revenue. They're stuck with inventory that they have to deeply discount. They have no CEO. They're still looking for a CEO. You want the CEO, John, of JCPenney?
Yeah,
no, qualified to do that.
He did not raise his hand on this. Yeah, that really is a tough one. And then look at Macy's yesterday. Yes, we had this strange stock reaction because of the run-up that we had, but the quarter was really good. But that shows you not all department stores are created equal. Not all retailers are created equal. JCPenney is struggling. The merchandise was wrong, and that you pointed that out. They had to sell a lot of it at a discount because they just didn't quite meet the demand, the fashion demand, like they thought they would.
But growth was tepid. If you look at it, compared to what you've seen from Walmart, what you see out of Home Depot, out of the winners in the environment, what they're producing.
What happened with Walmart, though? You know, the business model for the longest time was they had everything under the tent, and they had everyday low prices. So you could get anything you wanted at the best price. What happened?
They still have
that. They still do that.
Yeah, but they had to change their business model to a great degree.
They have made a shift. They've made a shift. They talk about it all the time, their transformation. They've sold off some key assets like their presence in or partnered in the UK or in Brazil or elsewhere in order to fund investments on the internet. So they're making that pivot. They know, like anyone knows, that the future combines the internet with bricks and mortar, so-called alt-channel model. They are making that pivot. They've had the wherewithal and the money too. The big difference is the investment in the internet. Everyday low prices, value every day. That's what they stand for, and they haven't swayed from that. And if you look at these numbers today, what was really impressive, put the internet aside, they were up in the stores. Traffic was up in the stores in an internet age.
As somebody said, they had bigger baskets.
Somebody said that. Everybody's not shopping on the internet, and they never will. And they came to Walmart stores in droves. And of course, it's a great time to be a consumer.